Okay. So annuities product, we will focus today's session on annuities and running an illustration as well. Last time we couldn't run the illustration, but we were going through the basics. So as you know, annuities overall, why do we need annuities? In our X curve, annuities help us to protect against the risk of living too long, right? Which is also protected by IUL.
You're going to be in a Zoom meeting.
And annuities help as well. Annuities cater to our 401k and other assets, whereas IUL is for protecting our life in the young age, as well as it protects us from the risk of living too long, along with the critical illness and other benefits. Okay, so this annuities is a contract between the client and the insurance company, and they can do one-time payment of initial premium, or they can keep on adding to the same annuity. And it is mostly like a CD. You can have multiple CDs, or you can add on to the same CD. So it is allowed. We will see those scenarios. And there are different kinds of annuities that we will go through. Accumulation annuities, which are also called deferred annuities, and then income annuities. So goal is basically to protect your assets for retirement and to provide you with a safe retirement income, and then to pass on the legacy to your loved ones without probate, because the whatever is the value, remaining value of the annuity, that goes directly to the beneficiary, passing the probate process. Okay, so annuities, like we were discussing last time, two kinds of annuity. The products like Asset Shield from American Equity, and we will see there are different products. A lot of products focus only on the accumulation value part, meaning the many clients, they're more interested in the, especially in the young age, they are not much worried about income part. They say that, okay, how will my money grow? So this deferred annuity is for that purpose, and your money will grow tax deferred. Year by year, you don't have to pay taxes, and uh, only on the withdrawal, like we discussed last time. And income annuities are mostly focused for the people who are who have 10 years to retirement or a little bit more, and they are focused that how will they start withdrawal of that money after age 65. Okay, so there are lifetime income guaranteed annuities, most of them that we deal with. So like we were discussing, even if your money finish, you will continue to, company will continue to pay the annual income for the rest of your life. Okay, so this is the picture, the basic picture of the annuity that we discussed last time, that a client initially put some premium money one time, and then depending on the product, client might get some bonus ranging from 3% to 40%. So we have a lot of different products. So there are some products where initial bonus is up to 35-40%. Okay, those are mostly income annuities. On the accumulation annuities, the bonus can range from 3% to about 10%. So we will see those products. So now after initial bonus, the main attraction is the fixed index strategy. Your money will grow. And then after certain age, if it is an income annuity, then distribution phase will begin, wherein your initial income will begin with about 3.5 to 5.5 of the accumulated value. and then that income will continue to grow for rest of your life. Okay, so this is the basic concept we discussed last time. I'm just going through quickly because we already discussed this last time. So, and immediate annuities are for the people who are already very close to retirement, right? So they are already 65, they have a lot of money in 401k. Let's say people, doctor client have $1 million in 401k or $2 million. Now he's asking that how much money can he withdraw every year. So annuities are really good for those people as well because these will give much better return than the CD, right? And those income will continue to grow for rest of their life. So those, but income will begin immediately. So those are called income and immediate annuities. So we have
Hey,
products for that.
Anil bhai, Arpan bhai, can you mute the line? Some
Oh,
background noise
yes,
is coming.
yes. Okay. So, all right. So now, primarily, we deal with three. I would say there are multiple products available. Athene is there. American equity is really good. That is my favorite right now because of their indexes and the participation rates. So American equity is really good. North American also have annuity products, and Allianz have really good annuity products. Okay, so Allianz login you will only get once you do at least $50,000 of business, right? So there is X amount of business that you have to do, and then only you will be eligible to get the login to Allianz. But before that, you can use your field builder for that. So field builder will
Anil
always
bhai,
yes.
Anil bhai, this is Vagesh. Sorry, there is right now Allianz logins are not getting to anybody.
Okay.
Yeah, it's
Again,
very
this one?
selective at this moment. Yeah.
Okay. All right. So actually, yeah. So, I know a couple of people. They got it just a couple of weeks ago. So maybe they stopped again. That's fine.
Yeah. So basically, anybody who had before they got it, and
Okay.
the new ones are very selective.
Yes. So you're right. They're very selective. You have to do some X amount of business, then you might be eligible. But let's focus, Vagesh bhai, thank you for pointing that out. So let's focus on American equity, North America, and Athene. Is that good, Vagesh?
Yeah. Please.
Okay. All right. So for initial learning purpose, let's focus on American equity. And the websites you should definitely go through all of these companies that are available to you because each of the website have different features. For example, North American, if you go annuity home and then if you go interest rates, okay, this is interesting actually. Click on interest rates and then here you click on index returns. Okay, so I simply logged on to North American under annuity home. I went to the rates and then I clicked on index returns. Okay, so here let me make it bigger. Okay, this is interesting because all the indexes that they have, you can choose a date. Some clients are very particular, that tell me how this index performed in last 3 years, 4 years. So you just give the date here, let's say 12/31 of 2018. So you will be able to compare the results. So let me increase the font for you. I hope this is legible now. Okay. So you see that S&P went down in 2018. So most of the indexes are down that year, but still there is multi-year point-to-point growth. S&P, oh, this is 2-year. Okay, that's why it is positive. This is 3-year term. That is why it is positive. Okay, 2-year term, but single year, most of them are negative because S&P went down. Overall, the market went down. Still, there are some indexes which are low volatility. These are mixtures of equity and bonds. Okay, so there is S&P Maestro 5-year index, 2.8% return, even in 2018. Now let's see 2019. So this chart will actually help you to choose your indexes also, because everything is in front of you. So 2019 S&P index went up 29. And all these indexes which are mixed with the bonds, which are a little bit stable indexes, so they performed less than S&P market, but they are very stable. So these indexes performed 13%, 12%, like that. Okay. Mid cap 25%. Okay. So, and we will see the indexes that we are interested in are mostly these indexes. S&P Maestro index, we will see that some of the products, they give very high participation rate. So even though the return is less, but your participation rate will be much higher than S&P. But for the client, if you are needing that data, how the market performed in last few years, so this is a really good table. So you give 2019, then you give 2020. So even in IUL, this will help you to show to the client. So that 2020, it went up 15%. 2021, it went up, again, it went up really good, 28%. So with that kind of returns, most of our illustrations performed really well. Okay. And the products also, whoever took those products, they all performed really well. But what I mean is, go through each of the website and use their unique features. This feature is not available in other websites, wherein they can give you in one shot all the returns based on the date. Any date you put in last 30 years, it will give you the returns. Okay. All right, let's focus on running one illustration. So American equity. So you log in into the website, then you click on, now we want to run an illustration for accumulation purpose. Okay. So you click on calculator, and then you click on here to launch the software. Okay. Before that, you have to finish all your specific trainings. Okay. For the products. So now you launch the product, you launch the software. So it will give you your agent information. Click next. Now you choose the product and the client. So you just enter the client information. So I can use the same client just for making it faster. Okay. This client is typical, like 41-year-old client, and we will go with the, let's say, okay, these things are not relevant in the accumulation annuity. We discussed about the joint income and the single income. So that part will come in the income annuities. So here are the products available. This screen is really good because in one screen, they give you all the different choices for your indexes. So choose your product. So our goal here is to grow our money, accumulate like deferred annuity product, to grow our money to the maximum. Okay, so Asset Shield is the product, And here there is a product asset shield bonus 10. It will give 10% bonus as well. Okay, but it will have higher surrender charges. So okay, we will let's choose this one, asset shield bonus 10. So surrender charge period is 10 years. So we were discussing the surrender charge last session also, that these surrender charges will go down based on, so 10-year product is available, 7-year product is available, 5-year product is available. Surrender charge is only for 5 years, but it is always advisable to go for the 10 years because 10 years will have maximum participation rate. We will see that. Okay, so your money will grow to the maximum with 10-year product, and your surrender charges will come down year by year. Initially it will be roughly around 9%, then it will go down to 8%, then 7%, like that. So in last year it will be just 1 or 2%, and then 10th year onwards, zero surrender charge. Okay, so so some of the products, they have guarantee. So some client are particularly interested in the guaranteed interest rate. So guarantee shield 5-year 4.3% if it is under 100K, and 4 points. This is the guaranteed fixed rate. Okay, better than banks, but not too impressive, but still better than banks. Now, main idea that we sell is the fixed index strategy. In fixed index strategy, this is really good. So you see that Bank of America, for example, Bank of America index participation rate with no fee is 135%. And if the client give 1.5% fee per year, then the participation rate will be 225%. So this is really good. For illustration purpose, most of the time I personally choose the one with the fee, because you see that difference is huge. You make almost double the money just by paying 1.5% fee. Okay, but if market goes down, you are still charged the fee. That is the only drawback. But in the long run, it will make up. Even if 1 year market goes up out of next 10 years, then all the fee will come back, because of the returns. We will see that. So I distribute money usually in these illustration with the asset shield American equity. I distribute 1/3 into Bank of America destination index, 2-year point to point, 330% participation rate. Think about it. Even if this index goes up 5%, client will make almost 16%, 17% return with 330% participation rate. Credit Suisse index, 350% participation rate. And SG Global Index, 320% participation rate. So these 3 indexes I usually choose. So let's choose that. Let's run our illustration. Any questions so far about the indexes?
Yeah, I have one. That
Sure.
will be, I guess, a basic question. So once the product selected, it can't be changed any further point of time. Am I correct?
Only till the anniversary date. So next anniversary date, again, that whole month, you can change it again. So every year you can change it once. Okay.
Yeah, Anil, but this is Satish. You are saying all the participation rate here they don't have this index funds doesn't have any cap rate. Looks like, right?
That's right. There is no cap rate. Correct.
Yes. Okay.
Correct. So that is the beauty of this product. This is actually too good to be true. You will see that.
Okay.
Let's say you have 100. This client has, just for making it easier, 10,000 is minimum in this product. But let's say, for our calculation purpose, $100,000 this client has put one time, either from 401k money, meaning old IRA money, or it can be bank money, or it can be SEP IRA, like we discussed last time. Okay, so different kinds of. So it doesn't matter where the money coming from. That will not impact the returns. Okay, so $100,000. Let's say this is a businessman and he has every year he put in about 50 to 60K into SEP IRA. So 2 years he accumulated 100K and he rolled over SEP IRA 100K. Okay. Now, next year, every year, this businessman, if you want to show it to the businessman, you can tell, hey, sir, you are already making good money. Let's put $50,000 every year SEP IRA into this. But then you add 50,000 here and you put from what age to what age. But for that will become confusing for us. So let's keep it zero. This client only put $100,000 one time. Now I will distribute Bank of America 2-year point to point. I will do 30%, 35%, whatever, 30%. And then Credit Suisse 35% and SG Global 35%. Okay, so total should be 100%. So we distributed money in 3 different indexes. Next, we will show how the money will grow. And let's say the rider, yeah, this product doesn't have any riders available, so no riders. Okay, so here is the output that it has given, and we will see the detailed illustration as well. But just for your knowledge, look at this. This is too good to be true. 100,000 will turn in 10 years, it will become 210,000, the accumulation value. And one sec, this is, okay, accumulation value, cash surrender value, and death benefit. Okay, so this one is coming with 10% initial bonus. In case this client dies next year, just hypothetical, the family will get $110,000. Okay, so the bonus is passed on to the family. But if he surrenders, then the bonus is not passed on, right? As you know. Okay, so there are some surrender charges. You see that initial 10 years, and after 10 years, there are no surrender charges. So 11th year, it is whatever is the accumulated value, same as the cash surrender value. Okay, so every almost 9 years, the money doubles. So in 18 years, the money will become 400K. And then again, in another 8-9 years, again, it will double to around 800K. Okay, by 29. Let me show the illustration. Actually, this one is with initial bonus. The returns are a little bit less. Let's choose the product without bonus and see once. You will see the difference. So now we will choose Asset Shield 10 product without bonus. And same strategy, 30%, 35%, 35%. And this is very simple screen. There are not too many choices. Okay, so very easy to run illustration. Yeah, so in the product where there is no initial bonus, the participation rate is much higher. So 100,000 in 10 years will become 246K, and in 18 years it became 600K in 18 years. Okay, so this return is kind of unbelievable for the clients, and this is based on the real numbers. So let's run the illustration and we will see that how detailed the illustration is. So illustration will give non-guaranteed and projected index values. Okay, view illustration. Oh, actually not for first 25 years, but all years, but let's see for 25 years. Any questions so far?
Anil bhai, Alok here. I have a question. Now,
Sure.
we have also seen, a couple of companies like Athene. I was just trying to run an illustration for 200K, and they had a participation, not participate, but they are contributing as a bonus, which is amounting to
Right.
25%. So, question is, between bonus participation rate, what works more in favor of the client in the long run?
Right. So those kind of bonuses are only available for the income annuities, not for the accumulation annuities. Okay. So those are kind of, your income is dependent on accumulated value. So that 25% bonus doesn't come actually to you in hand. It will be turned in illustration become impressive with that bonus, but it is still a paper money kind of. Okay, but it
Okay.
is really good for income annuities. So we will see that. So you are talking about the products which are income annuities, not the accumulation. This is accumulation right now. So there the money will not grow this much in the income annuities. So here the whole purpose is accumulation. So here, let's go through the illustration. Let me increase the font. Okay. So it is telling us that we have divided the indexes into three parts: Bank of America, Credit Suisse, and SV Global. Then it will give us the contract value. This is the guaranteed on the guaranteed basis. So even on the guaranteed basis, even if in the worst case scenario, if the market performs 0% for next 30 years, even then you see that because of their bonuses, the money will still grow at a very little pace, but it will still grow. Okay. So death benefit as well as cash surrender value is growing. So if market performs 0% for next 10 years, still in 10 years, the money will grow by 17%. Okay. This is guaranteed. Okay. But this is not a practical scenario. Tell the client it's not practical. This is what is practical. So this is based on last 10-year average returns of these indexes. So here the 100,000 is becoming in 10 years 243, and in 20 years it is becoming 600K. Basically in 18 years. 18 years after that we got 0% that year. So this is based on the repeated performance of last 10 years. 10 years is a safe period because market went down as well and up as well. So in a mixed scenario, this is how your money will grow. And you understood the only drawback in the application, you have to write that what is the drawback of this policy that you are communicating to the client. So you have to write surrender charges associated with this for 10 years. Okay, that is the only drawback. But you see that even if 1 year market performs good, so 100K will become 135K, and then client doesn't mind 144K, and then client doesn't mind even if there are surrender charges. Even after all the charges, client will still get 135K in third, fourth year. Okay. So this will mitigate all the questions regarding surrender charge because it is minimal and it will be covered by the good performance of this annuity product. So purely here, there is no income period here. This is purely your money is growing as long as you want, and it can continue to grow as long as you want. There is no age limit or anything. There are RMDs and other things that kicks in after age 69 and a half or 70. Required minimum distribution in 401k. But other than that, there is no other, meaning you can continue to You can let it continue to grow for your kids as long as you want. So look at this. This client get really impressive. This 41-year-old client, if he puts 100,000, by the time this client will retire at age 65, the money can grow up to 800K. Where else can you get such returns with zero risk? Okay, so look at this product as if you are buying it for your own self first, and you should definitely go for it. But any questions about this returns or any other
So
thought?
I have a question.
Mhm.
If it is too good to be true, the same question will come in client's mind.
Yeah, that's right. So we handle the question by giving them the details of the fixed index strategy, right? And you see that the company, you show it to them. Okay, so let me open that. So that company is not giving this money from their pocket right now. Right now is the best time to invest in these annuities, because bond rate returns are very high right now. So because the bond rate returns are very high, so these company, as you know, they don't invest your money in stock market. They invest in bonds. From the $100,000 in bonds, they will get right now, it's around 6% return they will get. Okay, so $6,000 they will make per year. That $6,000 they invest in options for these indexes, and based on those options, they give you 300% participation rate. So this is too good to be true only because of high participation rate. Meaning if the index is going up only 10%, the company will give you 32% return because of 330% of the participation rate. Okay. So, and this is, everything is in writing. This is all in contract. So even though it sounds too good to be true, but clients who have invested 10 years ago, their money has grown like this. Tell them that. And your money, if you invest, and if indexes perform almost close to this, then definitely you will get the same returns. There is no other fine lines here.
Another question is, can a client have a combination? We do accumulation and then convert it into a income later on at retirement?
That will be different product altogether. So it is called the you have to basically kind of surrender this policy and then move the cash surrender value. Okay, so that is allowed, and you can do it actually anytime. But uh, clients who are young, mostly their preference is the accumulation, and we will see that in income annuities the participation rate is not this high. So the client who are focused on income, so their goal is different. So we will
What do you consider as young? Below 50?
right, below 50. Correct. So we will consider that scenario also. We will run that illustration also and then compare. Okay.
But Anil bhai, this one
Yes.
like accumulation phase, then when we can get this money out?
Anytime you can get this money out. So in 10th, 8th year, this client, their kid went to college, they need 50K. You see that cash surrender value.
Okay.
You know, so this is the money available to you anytime, cash surrender value. Even second year, you see cash surrender value is 122K.
Okay.
After all the charges, this money is available to you.
Then when
Your
we
money
take,
is not locked in.
but then when we take this money, then we need to pay that regular tax. If I am moving it from that
Only on the
401k
profit. So that depends on where this money came from.
yes, okay.
If it is IRA, then all the IRA rules will be applied. If it is a bank money, then only on the profit you have to pay the tax.
Yes. Okay. Oh, okay. Thank you.
Sure.
Can you
Okay,
send this illustration on the chat?
yes, we can put this illustration on the chat. And like you have seen, it is very easy to run. Okay. And these companies are very friendly. They have sales department only for you. Don't hesitate to call them. Okay. Let's say you are hesitating to run, or you are not in front of your computer and you're talking with the client. You keep their number handy. You just call them and ask them, hey, can you run this illustration for us? For me, this is the product and 100,000 is the initial. So they will run it in 5 minutes and email it to you. Okay. So
Anilbhai,
what
one question.
is make
Uh,
best use of their sales team. Yes, please go ahead.
what do you prefer, annuity or IUL? Which is better?
Yes, so this is the agenda for our next class. We will do a comparison. We will run IUL and annuity side by side, and we will see the returns.
Thank you.
Okay, sure. So this is the 10 out of last 20 years, 10 best year performance, best 10 year. The average return, annualized return is about 12%. And the worst 10 years, the average return is 7.72%. So you can show this to the client that even if the market performed the worst, like from the period 2013 to 2023, that is the worst period. Even in that period, the returns, average return were 7%, which is much better than, so 7 rule of 72, you all know. So 72 divided by 7.72, approximately in 9 years, your money will double. Still, even if the market performs the worst. Okay. So
Anil, one question.
yeah.
I have a client who's right now probably about 60 plus, right?
Right.
Now I know we ran this illustration for much younger person. So can we do the same thing for?
Numbers will not change based on the age in this, because there is no health, no other issue. So it
Correct.
depends on the year. So from this age is irrelevant here. So if the client is 60 year, then in 10 years, by the time he turns 70, his money will become exactly the same.
Yeah. So that client came to me and told, hey, I have got 100K right now.
Right.
I'm choosing between doing a CD or,
Okay.
if you have any products, please suggest. So
yeah, this is wonderful scenario. So you show him this, he will be definitely impressed by this. Tell him, and he can, by the when he turns 65 or anytime, he can take out partial money also. So this is better than CD. He doesn't have to break any CD, and his remaining money will keep on growing. In his CDs, his money will double in maybe 25 years. Here, his money will become 2.5 times in 10 years. So this is very suitable scenario for that person. Very easy sale for you. Okay.
now
So
let's say
show
the
him this
person,
illustration.
okay, is there an illustration how we can say, that person wants to take like 50K after, 5 years, right?
Yeah. So
how do we?
You simply when we ran the illustration under withdrawal, we said 0. So you simply say withdrawal 50,000. See here, withdrawal, you say yes, and then what amount at what age.
Got it. Okay.
Okay, so show it to them. So if I change this to age 60, the numbers will not change at all. Oh, sorry, not here. I have to change it in the.
You got to go back.
Okay,
Yeah.
so what I mean is, let's say you're telling in 10, so by age 45, 46, this client wants to withdraw 50K. So only one time, not annually. Okay, so 46 to maybe twice he wants. So 46 to 47. To age 47. Okay. So you see that it will show up in the withdrawal part, and remaining money will continue to grow.
Got it. Okay. Oh wow, this is great.
Yeah, so tell him if he puts 100K, in 7th, 8th year, depending on the market performance, he can take his 100K back, and still his money will grow in next 20 years. It'll go back to 200K.
Got it. I mean, even if he wants to, take it back in the second year,
Yeah,
he still is making like 32K on his 100K.
Correct. This, remember, this is dependent on market performance, and nowadays it's very easy sell. So tell the clients that market has already dipped, so this is your reference point is already below the market average. So chances are you will make a lot of money in next 5-10 years because market will not drop too much. You're already catching the bottom. So
Great. Thank you.
But here we, Anil, by this,
how do we get access to this American?
You talk with your field builder. Your field builder have access to American equity. Your field builder will guide you how to. It's very easy. So these guys give as long as you have license, within 1 week you will get the American equity login. They're very quick and very easy.
Okay.
Okay, your field builder will help you. Yeah. Okay.
In this in this product, we are seeing the death benefit. Death benefit also which come with annuity.
So yeah, death benefit meaning it is same as the
value, account value.
Yeah, account value. There is no additional death benefit.
Okay.
Right, but the only benefit is that in case of death, no surrender charges are applied.
Okay.
Right, so that is why it is higher than surrender value for the first 10 years. But after 10 years, anyway, there are no surrender charges. So whatever is the money, it will be given to your beneficiary.
Okay.
So it is, in a way, it is good. Another benefit of death benefit is that it will avoid the probate process. This money will directly go to your heirs, to your beneficiaries outside of the probate process.
Got it. Thank you.
Sure. Okay. So our time is basically up. But so next week we will quickly run one income annuity illustration, and then we will compare IUL and accumulation annuity illustration. Okay. I will save this $100,000, and next week we will run a IUL illustration wherein client is putting in 20K for 5 years equal to 100K, and then we will see how to compare that returns.
Is that possible? We can do for income annuity also one time.
Absolutely. Yep.
Okay.
Next class we will run income annuity also illustration. Okay.
Thank you.
All right.
Thank you so much, Anil bhai.
Thank you.
Anil,
Thank you.
can we have an illustration without the bonus? Can you?
Absolutely.
Yeah. Thank you. Appreciate it.
Sure. I can put it in the group in the chat. Yeah.
Okay. Thank you.
Okay. Thank you, everyone.
Thank you, Anil bhai. Thank you, everyone.
Thank you.
Okay.
Thank you. Thank you.
Thank you, Anil bhai.
Thank you all. Good night. Thank you, sir.
Good night.
Thank you, Anil bhai.
Thank you. Thank you, everyone. Okay. Bye.
Thank you.
Welcome.